Hey, what's up, everybody? Wow, silver's price is really taking a beating today, getting crushed. On this video, I will be discussing why, giving you my thoughts, my opinions about it. Please hit that thumbs up button on the video and do share any thoughts, opinions you may have in that comment section below. But yes, silver is taking a major beating today, even though year to date, silver is still up quite a bit. Back in February, January, when I was purchasing quite a bit of silver at that time was about $21, $22 per ounce spot price. So still up pretty big in my view year to date, but it is taking a major beating, a major haircut today. As I'm recording this video on June the 7th, 2024, silver is currently down 5.55%. Anytime anything is down anywhere around 4%, 5%, or in this case over 5%, I would call that, in my opinion, a pretty large down day. Silver is down $1.74 to $29.64. So even though silver, in my opinion, is getting crushed today, like I said, still up a lot from where it was early in 2024. Gold is also down, not nearly as much, but gold is also down 2.71%, or down $64.40 to $2,312.60. Platinum is also down. Everything is in the red, a big sea of red. Platinum is down 3.39%, or down $34 to $980. And palladium also down by 2.84%, or down $26 to $930. And wow, just as I rattled off all of these prices, spot prices for gold, platinum, and palladium, silver is pushing even lower. Now, silver is down over 6%, down 6.19%, or down $1.93 to $29.43. Who knows where these spot prices are going to be after I publish this video? Feel free to let me know in the comment section below as you're watching this video. Where are these spot prices at? Is silver down over $2 as you're watching this video? Or maybe it's made a little bit of a comeback? Let me know in that comment section below. But why is silver's price down so big today? All the precious metals, but especially silver, being down currently over 6%. And I think we can look no further than the jobs report that was released today. We're going to talk about that jobs report. Where are we seeing those jobs being added to? Which sector is that jobs being added to? One of those sectors I don't think you're going to be very surprised about, but we're going to get to that in just a few moments. One day economic data is released, and that data may be supporting, well, maybe Jerome Powell will cut interest rates sooner than later. Then a day like today, where the U.S. jobs data is released and they're saying not so fast. Maybe it will be higher for longer. And then you may have a Fed official come out and they're hinting towards maybe not so fast as far as cutting rates, but possibly even a rate increase. So in my opinion, that's why we have these such ups and we have the downs, because all kinds of data is being released. A lot of Fed officials are saying different things that supports different ideas, rate cuts, rate increases, higher for longer. You never know what is going to be released, what is going to be said. Sometimes the market on days like today gets spooked and you have silver down almost by $2. I would like to reference this article on Market Watch. It says, "Problems for the Fed? ? Bond yields jump after hot jobs report." The bond market had been starting to bet the Federal Reserve rate cuts were coming sooner than later, following some recent weaker than expected economic reports. Friday's job report may have thrown a monkey wrench in those expectations. The yield on the benchmark 10-year U.S. Treasury bond spiked from about 4.3% before the jobs numbers were released to around 4.42% shortly afterwards. Long-term yields are still below the 4.7% level they hit in late April, but it's possible that rates could begin to creep higher again. The number of jobs added in May was much higher than expected, even though the unemployment rate ticked up slightly to 4%. Wage growth complicates matters further. Wages rose 4.1% year over year, an acceleration from April's 3.9% increase, with workers taking home bigger paychecks. That makes inflation even stickier. We keep hearing this a lot by a lot of these articles over the past several weeks, that inflation is even stickier. And I agree, inflation is super sticky. Just look at the prices for the goods and services that we have to pay for. That is the proof, that is a fact, that inflation is super sticky in my opinion. Then it goes on to say inflation even stickier. As such, the probability of a rate cut at the Fed's September meeting dipped from about 70% on Thursday to just over 55% Friday morning, according to the Fed funds futures traded on the CME. Now, here's a shocking statement. It looks like the higher for longer rates and bond yield story isn't about to end just yet. Now, if you've been watching my videos for quite a while, at least for the last couple of years, especially surrounding the Federal Reserve, Jerome Powell's decisions on federal funds interest rates, that's something he's been saying for almost every meeting, is higher for longer. And there's another thing he's been saying for quite a long time, and we're going to get to that in just a moment. It says the rising unemployment rate combined with the uptick in wages will make some fear stagflation, but it's more like a slowing economy with inflation in the 3% range, said Bryce Doty, a senior portfolio manager with Cit Investment Associates. In an email to Barron's, Doty added, "We are using this move higher in yields to extend durations in the most of our bond portfolios." Still, others warn investors to not overreact to Friday's numbers. And let me pause right there just for a moment, because I agree, and I don't like to overreact or underreact to anything. I don't like to have FOMO, that fear of missing out. I believe fear of missing out, FOMO, is really real, and I think FOMO goes in both directions, both when the prices are coming down and when the prices are going up. When the prices are going up, a lot of people are scared, are worried that they're going to miss out because prices are going to go way too high. Then when the prices dip, when the prices come down, then people are afraid that they're going to miss them dips. So that fear of missing out goes in both directions, in my opinion. I do believe and try, in my opinion, to not FOMO. Don't have that fear of missing out. Other recent labor market reports, including the most recent weekly jobless claim figures, the ADP private sector employment data, and the U.S. job openings labor turnover survey, JOLTS, G-O-L-T-S, still suggesting that the job market is starting to soften following the Fed's series of rate hikes in 2022 and last year. And I also agree with that. As I have mentioned in many videos previously, I have seen and been seeing many layoffs, close friends and relatives. So I do believe that there is a softening of the labor market. Yes, indeed. I do believe that, in my opinion. Then the article goes on to say this should limit any impact to the Fed's expected rate path, as we still target September as the most likely for an initial rate cut, said Steve Wyatt, chief investment strategist at BOK Financial, in an email to Barron's. Unfortunately for investors, Friday's jobs report only adds to the confusion about the health of the economy. There are worrisome signs of a slowdown, but the continued labor market resilience supports the notion of a soft landing. With the bond yield rising Friday morning, it seems that the good economic data is bad for investors narrative is back in vogue. Equity investors appeared to take the news in stride. Stocks were roughly flat in mid-morning trading. Instead of celebrating the good news, investors decide today they will focus on higher yields and conclude the Fed won't cut rates, said Kevin Rendino, chairman and CEO of 180 Degree Capital, in an email to Barron's. When the numbers are soft, we panic about a recession. When the numbers are good, we panic the Fed won't cut rates. This is the reaction to the employment report, he added, concluding that the market can't win. And don't forget about the books being cooked for the market makers. All right, enough of this article. Where are these jobs coming from? I am going to report these stats from a CNBC article that is explaining a little bit about where the majority of these jobs are coming from that bolstering jobs report that is making the precious metals tank today, especially silver. But we're going to discuss this. So according to the CNBC article, in May, employment swung higher in several industries, with healthcare leading the way again this month. And get ready for this, followed by, yes, that's right, government getting even bigger, followed by government and hospitality. The three sectors respectively added 68,000, 43,000, and 42,000 jobs. So I'm looking at this little graph, and it says May jobs, 1 month net change, healthcare and social assistance, 83.5 thousand, followed by government, 43,000, and leisure and hospitality, 42,000, professional and business services, 33,000, construction, 21,000, retail trade, 12.6 thousand, transportation and warehousing, 10.6 thousand, then financial activities, manufacturing, then wholesale trade, utilities, and that's about it. And then it says mining and lodging minus 4,000. I didn't see anything on there about part-time jobs, but in my opinion, a lot of these jobs probably are part-time jobs. And I do have one question for you. How many jobs do you think over the next several years that AI will be stealing? I don't know. Good question. Let me know your thoughts about that in the comment section below. Before ending this video, let's check in on silver. What is silver doing? Is silver now in the green, or is it further in the red? And silver is still in the red. It is down still over 6%, down 6.06%, or down $1.89 to $29.49. I do appreciate everybody for taking valuable time out of your day to watch this video. Please do let me know any thoughts, opinions you may have about the jobs report, about silver being down so big today, about gold, platinum, palladium, whatever you would like to discuss in that comment section below. Let me know. Please don't forget to hit that thumbs up button on the video. Thanks everybody for watching. Like, comment, subscribe, share, and I'll talk to everybody on my next video. Thanks a lot, everyone.